Welcome friends, Asli Bania welcomes you once again. Today we have brought you another multi-bagger stock that's name is Fermenta Biotech Ltd. This company is into an interesting sector. This company is the only producer of vitamin D in India, and the company has plans to go into multivitamins and in the nutritional sector. So company has a very bright future in nutraceuticals. So this is an interesting trend to watch out for, and I think that this trend can play a very important role, and this can become a mega trend in next 15-20 years. So let's see what's into this stock. So this is our standard disclaimer. I am not a SEBI registered analyst, and this video has been prepared only for educational purposes only. If you want to invest in this stock, please consult SEBI registered investment advisor. Me and my associate may or may not have any share of Fermenta Biotech Ltd. Fermenta Biotech Limited's earlier name was Dufar Interfen Limited. Basically, Fermenta Biotech was a subsidiary of Dufar Interfen Limited, which was founded in 1951, which is quite old. It's a 60-70-year-old company. So now it has been merged with Dufar, and the company name has been changed to Fermenta Biotech Limited. So basically, the company is in business of pharmaceuticals and integrated biotechnology. So Dufar Interfriend Limited was holding 91.2% of Fermenta Biotech, and it has been merged. So as I already explained, it is the only manufacturer of vitamin D3 in India. Vitamin D3 is basically manufactured in two forms. One is for human consumption and the other one is for animal feeds, which is used, and it is among the very few producers of vitamin D in India, and it supplies to 300 customers worldwide. So that is a very interesting thing. The other thing is company has real estate assets, so which we'll be detailing out in the further slides, and company's plants are located basically in Kulu and Dahej. Now company has merged with its subsidiary, so company is saying basically that performance will get better, and company is trying to get rid of non-core businesses like filmmaking, and it has announced that it will be out of all non-core businesses by end of financial year 2020. Now coming at the consolidated financials, if you see the consolidated financials of the company, the top line is growing as well as the profit, operating profit is going. The profit margin, if you see in year 2017, that was a blip because that that was at a time when the prices of vitamin D went down. So otherwise the company enjoys a healthy margins of around 35-40%. Now looking at the yearly results of the company, so if you see the top line has grown in last 6 years from about 6 times, and the profit has gone almost 10 times operating profit. The margin has also increased. So uh, the company is growing very good and is the only producer of vitamin D. So the EPS level, if you see, the company is having EPS of around 120 rupees per share, which is quite good. Now, if you see the operations, like if you leave out the year 2016, 17, 18, 19, company is generating huge amounts of cash from its operating activity, which is investing for the future businesses like nutraceuticals, and the financing company is taking also some finance to support the investing activities. Now coming at to the real estate assets of the company has a building, commercial building called Thane 1 in Thane, 2000 square feet of leasable area, almost 100% occupied, and company also has a 5.5-acre freehold land in Thane. Then company has a CJ house in Worli, around 10,000 square feet area leased. Then company has around 45 acres of freehold land in Takave near Pune. So the company has announced that the real estate value of all the real estate holdings is around 500 crores, which is almost 80% of the market cap. and company is treating these real estate assets as annuity income because that is almost fixed and which it is getting year after year. Now coming to nutraceuticals. Basically, what is nutraceuticals? So, like dietary supplements, like they provide nutrients extracted from natural and synthetic sources to boost immunity. If you look down the last few years, like everybody is vitamin D deficient and multivitamins consumption is going up. Even the fortified foods, like in some cases, the government has also mandated to fortify various food products. So if you see, this is a very interesting trend and the consumption is going to increase a lot. So basically there are three stages. The functional foods and nutritional supplements is the first stage of the journey, which the company is at night now. Then the core nutraceuticals is the second stage, where company aims to tackle common health problems through supplements. And the third stage is medical nutraceuticals, that encompass special nutritional needs such as infant feeding, chronic ailments, etc. Now coming to company has planned to diversify into multivitamins from vitamin D. Now, as we have already explained that there is an exponential increase in fortified foods in the market, so the demand of company's product is increasing. Even the government guidelines is of great help, the use of vitamin D in food fortification. So by diversifying in multivitamins, the company can reduce its dependence on vitamin D, and it will provide a greater stability and better margins, and it will avoid a scenario which companies saw where the margins almost dropped to nil in year 2017. So the company aims to be nutraceuticals integrated providers in the next 5 to 7 years, and company is open to acquisitions, and as company has informed that work on many products is midway. Now coming to pros and cons of the company. Company is consistently paying dividends for last several years, and currently dividend yield is around 0.2%. Promoter holding is 63.15%, which after merger will reduce by couple of percentage point. If I am not wrong, it will come to around 58%. The company says that its borrowing is low cost due to significant exports to various countries. And if you see the operating margin of the companies has increased and it is around at 35%. The only con which I could think of is like in the year 2070 is when the animal feed D3 prices remained volatile and due to Chinese competition, so that led to the results being lower. And as also explained, the company says that the human consumption vitamin D3 does not see that much price volatility. Only the animal feed vitamin D3 sees the price volatility. Now coming on to final review, Fermenta Biotech Ltd is available at a CMP of around 600 rupees, PE of 5.5 and market cap of 588 crores. And in that 588 crores, you are getting 500 crores of real estate assets. Uh, as I have already mentioned once that in my personal opinion, the nutraceuticals can be a mega trend and we should watch it out for next 20 years. Although there are several risks how the company expands and there are various risks and expansions, but we should always watch out for this company. It doesn't mean that we should invest in this company, but we should always watch out. Historically, company shares has 13 to 15 PE minimum, although at some years the PE was much more. The company intends to grow at 18% CAGR, whereas CAGR is much more than 18% at the moment. So if you see company sales grow for the past 3 years at 38% and profit growth was 377%. The profit growth looks inflated because of the year 2017. Company may post a revenue of 550 crores, net profit of 140 crores and EPS of 153 by year 2022. So for Fermenta Biotech, the price might go up to 2100 rupees based on PE of 15, approximately 3x opportunity from 2 years perspective. This is a low risk stock. The probability of price fall is low. However, like due to this merger, the stock has fallen a little bit, and we don't know, it may fall a little bit more or not. So friends, thank you very much for listening to my video. If you like my video, you can subscribe to my channel by clicking on the link below the blue colored arrow. Thank you and see you next time.